all of those sites like Robinhood and Acorns, et cetera, where you can actually do the trades, but you may not necessarily get the information about the stocks. But you're right. People are afraid. And I think millennials are probably traumatized, and some boomers as well, from what happened when the market crashed back in 08, 07, et cetera. And so people are afraid. So the fact that you dived in, good for you, because I think a lot of people just like, they're afraid, they don't understand it. And so they just stay away from it.
And it's unfortunate because you can start an account with these sites. Well, let me speak for what I know. I know that with Stash in particular, you can start with as low as $5.
Yes, you're absolutely
right. So you're buying a fraction of the stock as opposed to the real stock. Whereas with Robinhood, you buy one or a full stock.
Right, exactly. You're absolutely right.
That can be intimidating, of course, because some stocks are like, I don't know, $2,500.
Right.
Hello, Amazon.
Right. Exactly.
But let me just give a little example. I bought $50 worth of Chipotle stock.
Mm-hmm.
And I've gained like 40%.
Now, wow, good for you.
Now $50 isn't a lot of money. So 40% gain is not a lot of money, but it's still a 40% gain.
Right.
So
and it's money you didn't have to work to earn. You know what I mean? Like, you're not out there toiling for it. There's a quote from Warren Buffett where he says, if you don't learn how to make money while you sleep, you're going to work until you die. Right. So passive investing in stocks, like everybody can't or doesn't want to do their own business or a side hustle or flip real estate or whatever, but everybody can buy stocks.
Yes.
So that, 40% you made was something that you just bought it. And then you looked a month later or 6 months later, whatever, and you had made another, $20. And you're like, okay,
Right.
And that's the beauty of passive investing. Yeah.
And, also, I'm only familiar with Acorn, Stash, and Robinhood, but they also have a lot of information about the stocks.
Yes.
So it's not like you just throwing your $5 away. You can choose what stock you want to invest in.
Right.
And so I think people need to understand. I'm glad that you have developed Millie Money, because it really is going to encourage people to find out more about investing. And they can even do that not just on your site, but as they sign up for these platforms or apps or, investing platforms. They don't have to be afraid because the education is there for them.
Right.
There are resources.
And you can start with, like you said, you can start with a fraction of a share. You can start with 1 or 2 shares of something that you're familiar with, like Apple. I bought 2 whole shares of Amazon. I mean, Amazon is expensive, but so I don't have a lot. I have 2 shares.
Right.
I bought 2 shares of Amazon because I just think Amazon Prime is like taking over the world.
Right.
You know what I mean? My husband, who doesn't do anything in the stock market and is not much of a shopper, loves Amazon Prime. Like, whenever I say I'm gonna buy something, he's like, look on Amazon Prime. I'm like, okay, all right. You can buy 1 or 2 shares of something that you like. You like their product, you use their product, and just kind of see how it goes. You know, and it's not like, people think, oh my God, you're going to lose all your money. One of the first things, you learn about the stock market is don't take losses. Yes. So, I bought a couple of things and I probably should have sold them. They didn't work out like I thought. Right. And so you need to kind of watch them. And so you need to watch them but again, it's on your phone. So I go on to, my stock app every day and see where my stocks are. And I was just too lazy and didn't sell them. And I probably should have sold them. I bought a cannabis stock, and then everything that happened with vaping, cannabis stocks all went like that.
Yeah.
So that one didn't do well for me. And I should have sold it probably $10. It was only a $20 stock. It was like $25. Right. Now it's down. And I probably should have sold it. But, it's not like I lost a lot of money on it. Because like I said, it was a $25 stock. And then I have another one, a tech stock, that didn't do well. But one of the things you learn, and one of the things, our videos talk about, is don't take losses if you can. So I hold on to a stock. Like, I bought Home Depot probably 4 or 5 years ago at maybe $40 a share. It's over $200 a share.
Yes.
So I made like $150 or more a share on it. That was kind of a long-term play. I bought Starbucks and I sold it too soon. Like it was kind of staying around 70-ish a share. And I was like, oh, this is not going anywhere. It went down, it went back up again. And I sold it. And now it's like, skyrocketed. They've done really well. You're not going to win every time.
Right.
But one of the ways to kind of make sure you win is if the story about the stock changes, then it's time for you to get out. Right. So that was my clue on cannabis. It was kind of like when all the vaping stuff started, I should have been like, you know what? Everybody's concerned about e-liquids now and all that. Let me just go on and get out. So that's the thing. You invest for the long term. Right. You sell if you think the story has changed. The outlook for the stock has changed. But if it's just the macro environment, like the economy, like in 2007, everything went down, whether you were doing Procter & Gamble, whatever you were doing, every stock went down. That's when you hold on because all of those things recover. And so you sell if something changed specifically with that stock. Like if all of a sudden Apple's products are no longer popular, then maybe that's time for you to sell Apple. But if the whole market is down, just like the whole real estate market may go down at some point, but it comes back. And especially if you're 30 years old, you hold on until it comes back because everybody is not going to go under. You know what I mean? Procter & Gamble is going to be selling diapers forever. So that's when you hold on. You only sell when the quote unquote, the story of the stock has changed.
So that's good advice because with the experience I have, I didn't realize that. And let me give you an example. So I bought Boeing stock when it was doing very well and had been doing very well for years. And then there was that accident. That was the fault of the company or manufacturer, which was Boeing. And as such, the stock went down.
Right.
And I've lost.
The story changed.
The story changed. But I felt like I needed to hold on to it.
Right.
The reason is because Boeing is a very long time company. Right. I'm sure they've had pitfalls. And in fact, I know they've had pitfalls in the past in my adult lifetime, and they recovered. And so I'm kind of sticking it out for that reason. And my losses have been up and down. So at one point, it was down 17%, I think.
Okay.
But now it's only down like 3%. So
that's not bad at all.
It might be closer to 4 or something.
Right.
But at any rate, I feel like it's going to recover. So I'm holding on to it. But now I'm starting to think maybe I shouldn't hold on to it.
Actually down 3%. I'm surprised it's not down more than that. That's actually not bad at all. You know what? I think in that case, because it has such a long history and they're being very aggressive about fixing it and addressing their issues, I think in that case, you may want to hold on to it for a little while. You know what I mean? With the cannabis thing, it was like the whole industry and, just so I probably should have sold it. What you should do is set a target for yourself and say, if this goes down 10%, then I'm just going to get out. You know what I mean? And then that at least makes you feel better. You also got to get used to the idea that you're going to win some and you're going to lose some. You just want to win more than you lose. And so that's why on the cannabis, I should have just opted out of it and just been like, you know what? This story is going to take a long time to change because it's a new product. So unlike Boeing, which has been around forever, this cannabis company is relatively new. So, you know what I mean? Their ability to turn themselves around is probably different than Boeing. And also it's stuff outside of their control. Boeing, it's in their control. So they can fix those airplanes, was the MAX, whatever. They can do that and, turn themselves around. With the cannabis thing, this company is not even involved in the kind of the stuff that's making people sick, but they're in that same industry. And so what's impacting them is out of their control. And I think that's two of the things that make a difference as well. So I think if you're only down 3% and you're comfortable with Boeing long term, that's one way you may want to hold it. Yeah, I can't blame you for that.
And that was like the last I checked. It had been fluctuating.
Yeah.
But I think that most recently the biggest loss was like 5% or something.
Yeah, it's not bad at all.
The last couple of weeks. So I'm like, I can live with that, right?
Yeah, that's not bad at all.
Other investments that I have, I mentioned Chipotle. I'm also have Microsoft. Those are doing well.
Right.
So
yeah.
it is kind of balancing out.
Yeah. And again, I kind of stumbled on that when I said it, but I think some of it is, one, if the company has a long history, like Boeing does, a long successful history. Mm-hmm. And second, if the story changing was something they can control. So like Chipotle, it was, their food and whatever, they had for a while. And I don't know if you bought it before or after that, but that was something that they could kind of control, where this cannabis stuff is kind of out of their control. And so everybody was just kind of dumping any stocks related to vaping or whatever. So there's not a lot they can do, know, and so that's why I probably should have sold it. So you try not to take losses. You try not to fall in love with something, so Home Depot I've had for a long time, and it's gone up and up and up. So I'm in love with that. But if that story starts to slow down, like if there's a change in housing, and people stop buying houses, like right now, interest rates are low. So people are still buying houses, they're still renovating, etc. But if that changed, then maybe it's time for me to get out of Home Depot. So it's kind of a long-term view, but you also have to think about whether the story has changed.
Right.
And again, I'm not an expert, and I'm not an expert on every stock. Right. So that's why the goal of the site is really just to present, for me to be, I know what questions to ask. Like I can't tell you everything about Boeing. I can't tell you everything about Tesla. Sure. But I know what questions to ask of a stock analyst because I used to be in that world. Right. And so that's what the site aims to do. And then you kind of draw your own conclusion about Netflix or Disney and all of that kind of stuff.
So as a novice investor, I find it very cumbersome to read some of the financial analyst stuff that you need to stay informed about. And some of it, I just really don't understand the way they write about it or even talk about it. It's to another investor, of which I'm really, I am, but I'm not an expert, right?
Right.
And so a lot of those articles and things are targeted for people that are big investors. They have, thousands of shares of Amazon, and I have a fraction of a share of Amazon. And so it's very difficult. So I think what I'm gathering from Millie Money is that things are put in simplistic terms. And that's what I like about it.
Yeah, and it's also video. So I have to tell you, my eyes glaze over at some of those reports. And I'm what's called an institutional investor. So for years, I invested on behalf of banks like Barclays and Chase, et cetera. I ran what's called a trading desk. And yeah, that stuff is geared toward people like me. And then my eyes glaze over at a lot of it. They really do. It's really not, it's not very user friendly. Oh. It uses a lot of terminology that people are not familiar with. Yeah. So what we aim to do, like after I left Wall Street, I started doing a lot of training. So I teach a lot of online courses really aimed at not investors like us, not personal investors, but people who are new to banks and who are doing what I used to do. But that enabled me to learn how to put stuff in simpler language. So if you just got out of undergrad and you have a degree in English, but now you're working at JP Morgan, my job is to help you understand how to do what I used to do. Yeah. So that helped me to learn to do that and to explain stuff in everyday language in a way that people would not only understand it, but they would remember it. So that's what Millie Money wants to do. And the other thing is we use video, because video, I think, is a lot more engaging. Yes. Than necessarily written reports. And so all of our stuff is going to be on video. I'll be doing a lot of Zoom meetings with people similar to the kinds of stuff that you decided to do today, where I have a stock analyst on and I'm asking them about Netflix. The other thing that we've tried to do is, in addition to you being your own money hero, what we wanted to do was say to people, investors look like you. Yes. So a lot of people think that's for other people and not for me. And so the videos, I don't do the videos. I write the scripts because I understand it. But we have people, our goal is to get people who look like everybody, yes. Who are young, who are old, who are, won't say old, but, young or older. I don't consider myself old, but young or old. And then who of every race and every a multicultural view, because investing is really something that's really colorblind. Anybody can do it,